Welcome to Take a Brain Talk with your girl Flavilla Phone Gang. And today I'm going to fuel your brain with some bomb knowledge. Are you ready? Let's do it. Hey guys, welcome back to another episode of Tech Brains Talk. And I'm so excited because today we're going to be talking about effective strategies for fundraising during a pandemic or a recession. It could not be a more relevant subject right now. And I'm lucky because I have with me Yvonne Bajela. Yvonne Bajela was recognized by Forbes 30 Under 30 as a key influencer of global money flows in 2020. Yvonne is a founding member and principal at Impact X Capital, a UK-based venture capital fund that invests in startups led by underrepresented founders. Super important, super relevant. Over the last 5 years, Yvonne has invested over 200 million, yes, you heard it, 200 million in various startups and coached over 100 entrepreneurs across Europe, the Middle East, and Africa. Yvonne, it's a pleasure to have you here. How are you doing?
I'm good, thank you. Thank you so much for the introduction. It's really a privilege to be joining you on this podcast today.
Yeah, I'm really excited to do this session with you, and I think it's extremely relevant for what is happening right now. Before we get started, Yvonne, I'm going to ask you a question not related to the tech world or the world of finance. Maybe tell us a decision that you didn't take or maybe you took that would have completely changed your life.
Yeah, I mean, it is actually career related. But I mean, one of the biggest decisions I took in my life was actually entering the world of VC. So I was given the opportunity to join Mitsui, corporate VC, to head up Europe, Middle East and Africa investments. And I didn't really have any prior VC experience. And so for me, it was a real leap of faith. I was questioning, is this something that I should do? But I've always believed in, even if you're not 100% sure that you can do the role, learn as you go along. And that's exactly what I did. And that's kind of how I broke into the venture capital industry. And that's what I would advise anyone to do, like whether it be in your career or, if opportunities arise, always look to take opportunities where they make sense for you. And it could prove to be really fruitful. What's the worst that could happen?
That's actually the next question I wanted to ask you, but can you tell us a bit more? Because I think your journey and you've achieved a lot, for such a young age, and it's amazing. I think it's very inspiring for, anybody out there listening, so maybe really give us a little bit step back in terms of how you all started, from, university. What did you study and what led you to where you are right now? What led you to Impact X?
Yeah, sure. So I actually started out in investment banking. So when I left university, that was for me, it was one of the options presented on the table. And I thought, working for a big global investment bank would be incredible. So I joined Goldman Sachs, did that for a short period of time. But very early on, I realized that, banking wasn't necessarily for me. So to my parents' displeasure, I knew that I wanted to leave. I actually went into a consulting role at an insurer. And that was actually within the M&A team. So I was working there, helping them work through a transaction. They had received an offer to be acquired. And it was great exposure, great experience working very closely with the companies. And from there, I went on to do a short stint in strategy consulting, again, very much working closely with companies to help them acquire stakes in technology companies. And now these were big traditional corporates that didn't necessarily have previous experience acquiring technology companies. There was a lot of education I was doing on that end of things. And then the opportunity came up for me to join Mitsui. And as I mentioned, Mitsui, I was asked to take on quite a big leadership role. And I did feel a little bit out of my depth. However, they felt that my previous experience was very much aligned. So I jumped at that opportunity. And that for me was really how I broke into the venture capital industry. So last year, I joined Impact X officially. And for me, the reason why Impact X, I wanted to join it, and, it's a great team that sits behind it. It's a UK-based venture capital fund that invests in underrepresented founders. And we look for exceptional founders. And the reason why, I guess, when we talk about underrepresented, if you look at the venture capital ecosystem over the last 10 years, well over $500 billion has gone into startups. However, there's various data points to suggest that less than 5% of that has gone into female founders and less than 1% of that has gone into Black founders. And so there's huge disparities that lie there. So when we talk about underrepresented founders, these are founders that are not typically represented in your typical VC fund, despite making a larger share of the population. So we believe that there is certainly a gap in the market for those founders, and we actively seek to invest where others are not necessarily.
That's very interesting. I think it's a great focus to as Impacts has decided to stay on. But do you think there's also a need, before we jump into the subject, but do you think there's also a need for Impact X to educate or maybe change the mindset of other VCs?
Yeah, and I think that will happen gradually. I think that what we're seeing that's really interesting actually is a number of LPs are starting to drive that conversation around the need for more females, for example, at the decision-making of level of funds, because there's various data, again, that suggests that women are 2 times more likely or even 3 times more likely to invest in a female-founded company. So there's definitely value of having more diversity at that investment decision-making level. I think where we're going to see a real shift is for more LPs to start putting pressure on the venture capitalists. And we're starting to see that happen. We've got a long way to go, but it's encouraging to see the small steps that are being taken.
Yes. So let's talk about the subject of this podcast, effective strategies for fundraising during a pandemic or a recession. So what are the advice you want to share with us?
Yeah, I mean, obviously, speaking of it in terms of the context of this recent pandemic, fundraising has definitely plummeted well over 30%. And so we are in the midst of a financial crisis. I think that's pretty much commonly well known now. And practically speaking, venture capitalists have slowed down their activity, and that's what you'll find in any financial crisis where, the focus is going to be on portfolio companies. However, as venture capitalists, we are in the business of deploying capital, so institutional investors will always continue to invest irrespective of the environment. However, the bar's definitely been set higher. So for companies that do have, say, sub 12 months of revenue or in the midst of fundraising, they really need to have a think about their narrative and craft a story around, why your company will be enhanced by an infusion of capital as opposed to just surviving. Because they're the companies that I think are really going to have the ability to raise in this current environment.
Can you tell us more? Can we go more into details in terms of a narrative? Because you obviously mentioned that female and Black entrepreneurs get the least investment. Is this something that they don't know? Is this something that they're not saying effectively that need to change so they can improve their ability to secure investment?
Yeah, so what I always say to entrepreneurs when they approach me about raising capital is money is the least important part of the equation. You shouldn't really be focusing on just securing that investment. What you really need to be focused on is creating something of value, because there's enough money out there and money follows where the value is. So if you're creating you've created a company, really drill down into what value you're actually providing, what problem you're really trying to solve. Ultimately, VCs want to invest in companies that have the ability to scale to grow to multi-millions of pounds in revenue. And you need to be able to prove that. So when it comes to market, have an understanding of your market size. Is there the market for your company to scale? What problem are you solving? Is it a big enough problem? And why are you the best team to solve that problem? So it all comes back to the why your company, why your team, and why now? And that needs to be made very clear. And I think nailing that is the key to fundraising successfully.
What I'm trying to figure out with you, from you, Yvonne, is how is that fundraising different now because of the pandemic that we're going through in terms of fundraising in general? What has changed? What do entrepreneurs need to do differently?
Yeah, so when I say the bar's been set higher, I think that whereas before, there wouldn't necessarily be so much focus on the traction that the companies had, you need to make really clear what it is that, you've been able to prove. So, we can't just base it on the fact that, your friends think it's a great idea. You need to really have some proof that, whether that's your product's in customers' hands, whether that's you have customers that have lined up and said, we would love to use your product. Having those proof points are so important, particularly in this environment. And for me, something that I'm currently looking for in this environment is proof of monetization, because you can have a great product, but if you can't prove that people are willing to pay for it, then that's a different story. So again, it's just about creating this whole narrative that, yes, you've created something of real value that people actually need and love.
So if you were sitting, because you must have gone through a number of presentations, and maybe you can tell me what are the things that you hate or what are the biggest mistake people make, and especially now when they're trying to raise investment for the recession, what are the things that they definitely should stop doing?
For me, one of the key things, during this current period that I'm really focused on is that transparency. So I'm really interested in knowing, how was the business doing before this situation emerged? And what are you changing to navigate through this current period? What I don't want to hear is entrepreneurs tell me that they haven't been impacted by this current environment, because yes, you may have not felt an impact in the immediate term. However, there is going to be some sort of impact in the long term. So readjusting those assumptions is very important and being transparent around it. So if, revenues are expected to climb by 30%, be transparent about that. Like, investors are going to understand this current environment. And just, being able to tell a good story. I think that as well, some of the key mistakes that entrepreneurs tend to make is claiming that you don't have any competition. For me, that's always a red flag. Irrespective of the industry that your company operates in, there's always going to be some level of competition, even if it may not be something that's tech enabled. So great example is Uber. When Uber started out, there were a number of mini cabs and so on. They were their competition. Just because there wasn't any other tech-enabled driving services, that doesn't mean that they didn't have any competitors. And I think that's another key mistake that I often see entrepreneurs make. And it's as simple as doing a Google search. After every meeting I have with entrepreneurs, I just do a quick search on the internet and see, what companies are there, or have conversations with individuals that may be experts within that field. And I'm always surprised by the number of competitors I'm able to identify that have not necessarily been mentioned in the meetings.
So there's a lack of research, and people would always call for a lack of preparation before coming and presenting to a VC. It's interesting. I don't know if you have any great story of examples of companies that you've invested, because you mentioned that you invested and coached over 200 entrepreneurs and invested over 200 million. So what are examples of the most successful companies that you've invested in?
Yeah, sure. So I guess one recent company that we've invested in is an insurtech company called Marshmallow. And one thing I loved about that company when they first pitched me was just their knowledge of the market and the clear traction that they had had. They'd only been operating for a short period of time. However, they've been able to prove why their product was so needed in the market and the real problem they're solving. Just to provide a bit of context, so Marshmallow provide insurance to immigrants and migrants. Mm-hmm. Typically, the rates of insurance is much higher that's offered by the incumbents, simply because they don't use additional data points that Marshmallow use. And so clear value proposition, huge market worth billions of dollars. And they just made the proposition very clear, proved that there was real demand for their product. And also they had a great team. And the team is something that's always very important that I'm always looking for. And the team's ability to withstand a crisis. And I think during this period in particular, the team have really, really impressed me by their ability to really think about navigating the current environment.
That comes back to probably the importance of having a great team. But what do you believe makes a great team, Yvonne, for you to feel I definitely want to invest? Because I think there's elements sometimes we have entrepreneurs who don't have a co-founder, and I've heard that people tend to invest in companies or startups who have more than one founder, so that gives a bit more stability. People are looking for that, or people who have different type of skills. So I'm curious, in terms of, from your point of view, what do you think forms a great team? And can anybody win? Can anybody win or an investment if they come by themselves?
Yeah, so I mean, we've recently invested in a solo founded companies, but typically, when we are looking to invest, one of the things that we always look for is a multiple co-founding team. Reason being is that, it reduces the level of risk. And also, starting a company is tough, right? And you want to make sure that the individuals have that support. They can bounce off each other. And if you look historically at the companies that have gone on to do really well, it tends to be companies that, say, have 3 founders, for example. And so looking at it from that historical perspective, you can understand why investors tend to favor companies with multiple founders. Mm-hmm. And so I think that, when you are thinking about creating a team, like, what you really want to show is why your team is really well positioned to solve the problem. You may have, for example, worked in the industry for several years, have that deep domain knowledge. It may be a problem that you've encountered personally yourself. So a great example is a supply chain company that I was recently in conversation with. And when they were working in the financial service industry, they encountered this issue of having to check the end supply chain users, manufacturers, and they found it really challenging. So they decided to create a company to tackle that exact problem. Mm-hmm. And so where individuals, have encountered a problem, they know individuals within the industry, that is something that is looked upon favorably. But ultimately, what I'm always looking for is how passionate the founder is, because as venture capitalists, we're investing in a company for say 5 to 8 years. Yeah. So we want to make sure that the entrepreneur is in it for the long term and not just in it to make a quick buck and do it for a short period of time. So it's really just questioning that motivation and level of obsession really about tackling the problem.
Yes, and what would you say it's the best way to demonstrate that passion? And how do you able to see that? Is it through the attitude? Is it through ability to respond fast, to really take actions when it's required? How do you judge that passion?
Yeah, so for me, it's really about, over the years, I've come to spend a lot of time with entrepreneurs, like hundreds and hundreds of entrepreneurs. So you do start to see, what are some of the key traits in founders that lead to success. And that's something that I've managed to, become very familiar with. And for me, what I always try to do is spend time with the teams and look at the teams objectively. Some investors say they invest based on gut. I certainly don't. I spend time with the teams and really try to question their motivations and why, what is their why as well. I think that for me is what plays a major role, understanding what their motivations are, why the company is so important to them, and their ambitions and motivations behind it. That can reveal a lot about where the founder's mindset is and so on.
That's a very good point, and I think it definitely makes a difference. I mean, I'm thinking about myself as well as an agency. I think when people buy into Free Colors as what we do, they just buy into me, I buy into the team, Olivia, Harry, or whoever's in the group, and that's super important. You don't just choose to do business with somebody who's good at the job. You're looking for people who actually can have the right culture, have the right attitude, because that takes you further. That there's one thing that really I wanted this to be answered. You talk about the fact that the underrepresented founders don't get as much investment. Is this something that they're not doing right when they're looking for investment? What is it that doesn't make them trustworthy of investing, and what can they learn? What should they do different?
Yeah, so I guess one of the ways I see it is, the venture capital industry is very close knit. It's very small. Investors tend to invest in what they know, what they feel most familiar with, and also where they think they can add the most value. And so what's happened in the past is a lot of VCs have invested in their own networks, individuals that they may have gone to university with, they have a very similar background to. So oftentimes, if you're coming from an underrepresented background, you may not resonate as much as you would with an individual such as myself. And so I think that's in part where some of the problem lies.
Okay.
I think that, more and more funds are emerging onto the scene, such as Impact X, as Jane VC for female founders and so on, that are really trying to be more representative in the ecosystem. And so that's definitely shifting the needle. In terms of the education piece, I think that a level of education will always be required for founders, but in this current environment that we're in, it's very accessible. And so for individuals that are really determined to build and develop and scale a company, then resources and individuals are there to tap into more so than ever, really.
Very good. So I want to make sure I get this right. So you think it's also a lack of access to the right network?
Exactly.
Okay, so that's the reason why, obviously Impact X decided to focus on those underrepresented founders to change the game and create more opportunities. I'm curious to see in terms of what you would like to see and what you're hoping to do as Impact X, over the next, 5 years. What are your goals?
Yeah, so we have big ambitions. We want to be a multi-billion-dollar fund. My real hope is that in say, 10 to 15 years time, we're no longer talking about underrepresented founders. It's just something that, we've leveled the playing field, and it's not something that is spoken of, but there's definitely a long way to go before that happens.
Yes, absolutely. And I think it goes beyond I think I love the fact that obviously, as you know, I also run the Black Women in Tech Network with TLA, which is something that it makes sense to me because obviously as a Black woman, I want to do something that really resonates with my audience. And I think I've always been able to move around different networks, whatever. I was the only was only white man, and I was the only Black woman in the room. And I think this element of adaptability that is also very key. There's sometimes that we need to be educate ourselves, and I think again there's nothing that we can do against the network because, as you say, some people have access to networks that we don't even know about.
Yeah.
But if we can change that, that would change the game, and it's it's something that needs an education that needs to be done from both sides, for minorities, but also people who are in power. That would be interesting. That's the end of the first part of this podcast. We'll be back in a second.